Welcome back to another episode of the Dig Deep, the Mining Podcast. And today's guest is Keith Floyd, who's the founder, chairman, and CEO of Vox Royalty, who are a high-growth precious metals royalty and streaming company with a portfolio of over 50 royalty and streams, spanning 9 jurisdictions, and they are one of the fastest-growing royalty companies in the sector. Carl's an investment banker by background in the mining sector, so it'd be good to hear his journey and the challenges he's faced in growing, obviously, this royalty company. So with no further ado, let's welcome Kyle to the podcast. How you doing, Kyle?
Thanks, Rob. I'm fantastic. How are you doing?
Yeah, I'm not too bad. Here in the UK, and you said you're in Denver, was it?
Yeah, indeed.
Yeah. So let's get straight into this, and wondered if you can give the audience an overview of your background, from obviously your early banking days to sort of current where you are currently.
Sure. Yeah, the early days of my career was actually focused on financing growth companies for really a generalist focused investment bank in terms of the investor audience that they served and the companies that they served. And then spearheaded and built what became one of the most successful mining franchises in the US, financing small cap mining companies. The issue was that the risk-adjusted returns in the small cap mining sector really didn't stack up for what investors expected to realize, both in, say, up cycles and down cycles in the commodity sector. And so it was really that experience that led me to founding and creating Vox, which was an outlet for generalist investors to invest in the commodity sector when they believe that that exposure would be good for their portfolio. And I would argue that many investors are not weighted enough to commodities, and a lot of times that's because they don't really truly understand mining, and that's okay. So we went about building Vox for those investors. And my background specifically went back to Colorado School of Mines before launching what is now Vox Royalty Corp. And so we built a team around this belief that we could really deliver superior risk-adjusted returns in the commodity sector and do it through the royalty model. And so that is how Vox was founded, and a little bit on my background.
Yeah. So just wondered if you can give us an overview of Vox, and also obviously you founding the company and that journey.
Sure. So Vox is a royalty company. What we really focus on are what we call third-party royalties. So these are royalties held by whether it was a prospector that found the initial geological anomaly, or the small mining company, or the family office or family that may have held a cattle ranch that then became prospective for different type of mineralization. These third-party royalties are held by disparate parties all around the world. And so we created competitive advantages around finding, evaluating, and acquiring these third-party royalties. So we don't really finance mining companies. What we look for is these third-party royalties. And that allows us to scan the globe for quality royalties over quality projects that is not limited by mining companies looking for capital. And that's allowed us to be the fastest growing company in the industry. And it's really that let's say the journey that I went on in creating the company was how to find the best commodity exposure for investors, having really been working on behalf of companies and investors. And that's led to what Vox now is, which is the fastest growing royalty company, and I would argue the fastest growing royalty company at the best value for our shareholders.
Yeah. And obviously you built the company up over the last 7-8 years. What are you looking for in some of the companies that you're actually investing in? Is there any, do you have a certain criteria that you look for in a company?
Yeah, so a key point of differentiation in our model is we won't actually be buying or investing in the companies. We will go to, say, the geologist that has this portfolio of royalties from land that he staked that became prospective for mineralization, and then sold that land and sold that opportunity off to a mining company. So we would go to, say, this prospector in this example, and this has indeed happened within the portfolio, and say, look, there's all these royalties that we'd like to buy from you, or certain royalties that we'd like to buy from you. But the key for us is we're looking for the most interesting assets with the most prospective opportunities, so very significant upside, and priced at a value that is something that we feel really good about in terms of the ultimate value generation that's going to create within our portfolio for our shareholders. So the key criteria, we have a team of mining engineers and geologists, is first looking at the quality of the project. We don't fall in love with the deal. It's not about growth for the sake of growth. It's about growth with exposure to really quality assets. And so for a shareholder or a prospective investor that isn't a mining engineer, isn't a geologist, hasn't been in the industry for decades, they're able to really leverage that experience that we bring to the table in terms of finding the most interesting exposures on projects globally in the royalty context, which has delivered the best returns for commodity investors for a very long period of time now.
Yeah. And how do royalties perform versus mining companies? And I suppose looking at them from an investment perspective, as well as their difference in nature.
Royalty companies have outperformed essentially every commodity-based benchmark that you can compare them to for the last decade and a half, and really approaching 2 decades now that royalty companies have been around. When you look back at the historical returns of the likes of Franco-Nevada, Royal Gold, Wheaton Precious Metals, companies that have been around the longest, tremendous returns been generated for their investors, magnitudes north of what the mining companies have generated. Also very significantly better than even the S&P 500, the mining indexes of the juniors and the major mining companies, and in a lot of cases even outperform the NASDAQ. So if you're looking for distilled commodity exposure, royalty companies have been the best way to play commodity exposure in this general sector.
Yeah. What are the sort of royalty companies? Why are they superior to sort of mining companies? Obviously, you briefly touched on it, but what are the main factors why royalty companies are making, I suppose, vast more sums of money compared to mining companies?
Yeah, I think that the key differentiation between a royalty company and a mining company is that royalty companies have a distilled type of exposure where when you tip most royalties, call, say, an NSR, net smelter returns royalty, or a GVR, gross value returns royalty. These royalties are essentially an interest in the revenue generated by that distinct mining operation. So what that means is the royalty company would take, say, in the case of a 1% NSR, net smelter returns royalty, the royalty company would take 1% of the revenue generated by that mining operation. So the royalty company is then in a position to obtain the revenue without any of the cost exposures that sometimes affect mining companies. So whether that's margin contraction because inflation's actually drives up the cost of mining companies, or whether that's cost overruns just simply because they happen in mining, whether that's any new fleet of equipment, or it's more costly to drill out the resource. There's a host of different factors that attack really the cost side for mining companies that the royalty company is not exposed to. We just take the revenue from that operation. So we're limited in terms of the downside impact. And then we're also not exposed to dilution. So if that mining company goes and raises capital, either for reasons of replenishing cash or to go out and expand either production or the resource or the reserve, we don't have to contribute to that cash call, and we're not diluted. So if you own the equity in a mining company, when they go to fund whatever that need for cash is, you're diluted if you don't participate. And so it's this kind of asymmetric return and risk profile that works in the favor of the royalty company that benefits royalty company shareholders.
Yeah. And how is Vox different from other royalty companies? And obviously you've mentioned a few of the larger ones in that sector. Why is Vox different to those?
So Vox is different in a couple different capacities. One is our area of focus. So some of those larger companies I mentioned, they now finance mining companies. And frankly, that's very good for the industry, but that's not our focus. When we looked back at distilled returns in the industry, the best returns were generated by doing exactly what we're doing, which is buying third-party royalties. And so the larger players, to really move the needle, if you look at a company like Franco-Nevada is $30 billion. To move the needle, they've got to be able to deploy sometimes $1 billion at a time, where Vox can deploy $1 million and really move the needle for our shareholders. And so there's a lot more of these third-party royalties in the size range that moves the needle for a company the size of Vox, which is about $100 million market cap, versus the size of Franco. So that really led Franco and Royal and Wheaton down a route where they're financing major mining operations. And that's worked out very, very well for them. We just believe there's better distilled value in focusing on these third-party royalties. The second key point of differentiation between us and everybody else is we really focused on building competitive advantages distilled for that type of business. And so what does that look like? We went and we're both building and creating intellectual property around finding these third-party royalties when we found a group that was frankly farther ahead than us in the process called Mineral Royalties Online. We purchased that company. They had built a database of 7,000 proprietary royalties. So that we now essentially on the principal side of the equation, high grade that database, looking for the best mining royalties all around the world to bring into our portfolio for our investors. And that we did that complemented that effort was we really invested in establishing deal sourcing agents around the world. So it's one thing to know where a royalty is in the project. It's an entirely different problem to solve for in terms of actually getting in front of the royalty owner. That's the prospector in the bush out in Western Australia, or a doctor or a remote city in West Africa, or a family that used to own essentially land and cattle rights and surface ownership in South America. We've been able to find the owners of these disparate royalties and then transact with these owners because of these deal sourcing agents that work for us. And then underpinning all of that is a very technical team, mining engineers and geologists. Everyone on our business development team is technical by trade. So they are looking at the quality of the asset first. And that allows our investors to really capture what we believe is the best alpha, to use a portfolio management term, in the royalty sector.
Yeah. Why don't you give us an overview of the portfolio of assets that you have? Obviously, probably pick some of the better ones, better performing ones.
Sure. We're excited about our entire portfolio of royalties, Rob. We think it's one of the most exciting portfolios of royalties in a public royalty vehicle to date. We believe it's poised for tremendous growth for our shareholders, and they will benefit from the current cycle that we are in and the organic growth that is building within our portfolio. A couple of the highlights and just overview on it. We have 50 royalties and streams now. We have about 70% of our exposure is to precious metals and about 30% is to other. We believe that's the right mix for investors, in that it is that inflation protection, but also that growth protection, where the assets, say copper that's in our portfolio, iron ore that's at all-time high prices, vanadium, you name it. When we really understand the hard rock commodity that it is, we bring that in as well. So it's not just precious metals focus. And what we've seen is our non-precious metal assets are delivering significant growth for our shareholders right now. So that overall, what I would call diversification, slight diversification, really lowers our risk premium and the risk in our portfolio for investors, which is part of the reason why royalty companies exist, is to lower the risk, but keep a very significant return profile for shareholders. So we've done that within the portfolio. A couple of the assets that is exciting to talk about, we have right now, one of our larger producing assets is over part of the Koolyanobbing operations, the Deception Pit and Altair Pit, the Mineral Resources, a 7 billion Aussie producer of a host of commodities. This royalty, in terms of revenue, has been really growing a lot faster than expectation. So our first quarter, when we came out with revenue results, that was a lot more significant than we expected. And then we also have a royalty interest over the Segilola Gold project operated by Thor Explorations that is guided to first production in June. So those are just a couple of the cash flowing royalties that we're really excited about, or near to be cash flowing royalties. And then we have a host of royalties that are also in production and growing, and then a tremendous amount of development stage assets that, unfortunately, I don't think we have enough time to go through for all of your listeners and viewers, but really just tremendous amount of growth. We went public with 1 production stage asset. We now sit at 5 production stage assets. We expect to end this year between 7 and 10 production stage assets. That's just tremendous fundamental growth in the most tangible kind of capacity for investors, which is production, which turns into revenue and cash flow for the royalty company, and is a huge benefit for our shareholders.
Yes. And why should, obviously, the audience listening to this podcast or watching on the YouTube channel, why should someone invest in Fox?
From our standpoint, going on in the commodity sector, layer on just the amount of fiscal stimulus that's been pumped into the market, layer on the potential for an infrastructure bill to be passed in the US, you're going to end up potentially with a situation where you have China, you have the US, and then you have the other major economies that have central banks that can basically fund growth with debt, all competing for a very limited supply of commodities. What that means is I think we're in a period that's going to be very, very bullish for commodities. So for investors, instead of having to pick individual mining companies that are going to win, with Vox, we're picking individual assets that are going to win and deliver better performance. And that's based on the expertise of mining engineers and geologists. And when you look at a company like Vox, for example, when we hit 7 production stage assets towards the end of this year and potentially 10 as we get into early 2022, 10 production stage or producing assets would make you a major mining company in most instances, where Vox is still a small cap company. And all of that growth is going to continue to be this upswelling of positive pressure on the stock price and on the fundamentals of our business. But yet investors are getting that tremendous layer of diversification. So they get the upside of a junior or small cap mining company with the risk diversification of, say, a major company with many, many producing assets. And so it's really that kind of risk return matrix that I think works really in the favor of investors in terms of getting exposure through Vox to commodities.
Yeah. And as a conclusion, what's the outlook, I suppose, short to medium term outlook for Vox?
Short to medium term is really exciting. We continue to see compounding revenue growth as we have more and more assets coming into production and production growing within our producing assets. We also have what I believe is the deepest pipeline of opportunities in the sector. So we are continuously high grading the opportunities that we're able to surface through our database and our deal sourcing agents, and using our technical team to really understand what are the best priced and best quality assets that we can bring in. So our investors are going to benefit from this upswelling of positive momentum that's already in the portfolio that we're not paying $1 more for, and then also the additional royalties that we'll be bringing into the portfolio that continue to compound value in a very favorable fashion for our investors.
Yeah, really appreciate your time, Carl, for giving us an introduction to Vox. It's certainly a royalty that I'm going to be certainly watching closely as your journey progresses. If our audience wants to reach out to you and they've got any questions that need answering or find some more information out, how can they go about doing that? Are you on any social media platforms?
Yeah, we're always happy to engage. I think the best kind of first port of call would be to go to our website, and then there's ir@voxroyalty.com. I'm on there all the time. Our team is on there all the time. We're more than happy to engage and answer specific questions. And then we're on all the typical social media platforms as well. So whatever is most convenient for your audience, we're happy to engage through those platforms and excited to answer any questions.
Yeah, no worries. Well, I appreciate your time, taking the time to do this podcast and giving our audience an overview of obviously a royalty, and especially at Vox, and obviously aimed at the, I suppose, general investors that are not necessarily mining people, and obviously the people that are listening to this are generally people from the mining industry, but not necessarily investors in the mining industry. So it's probably definitely a stock that they should consider and look closely at. So really appreciate your time, and until next, and the audience as well. Hope you enjoy listening to this. Appreciate if you can pass this podcast episode and obviously YouTube video onto people that you know in the industry, whether it's investors or people that are investing in the stock market but not necessarily in the mining industry, because I think it's definitely an asset and a stock that you should look closely at. So appreciate your time for listening, and until next time, happy mining.